Well, we are shocked about what is happening. More bailouts are happening, which is unbelievable. I can't even believe that this is happening these days. How can we be in a system where people are willing to bankrupt the banks on this basis? Just absolutely blows my mind. So, you guys, we're going to be talking about some things that are going to be coming up today. We want to make sure that you are going to be in the best possible position for you to be able to take advantage of this on the other side. So we're going to be seeing some crazy stuff that's happening. I cannot believe that the bank has been bailed out. I can't believe it. Now, you guys know that we've been following this for a very long time. We are afraid of banks being bailed out because it actually became against the law for us to bail out banks. The fireworks that we saw last Friday when the Federal Reserve came in and seized one bank, seized the second bank. Now they've seized a third bank as these dominoes are falling over and more banks are collapsing. Absolutely shocking. Got a lot of stuff to show you today, but just coming in now before the Asian markets started to open and that mass contagion happening, they have now decided to bail out the banks. Is this 2008 all over again? Let's cover some territory just to catch you guys up quickly. The Silicon Valley Bank collapsed last Friday. The government took it over at 8:50 a.m. First thing in the morning on Friday. Now, they don't usually do that. They usually move into a bank and they will take over that bank when? At the end of Friday, generally, at the end of business day. Then they have the whole weekend to work to try to get it sorted out by Monday. So they took it over way before that, you guys. So they were failed because depositors were hurriedly rushing to take away money. If you guys want to look at the entire stuff, we are going to go through all of this, and I'm going to tell you which articles they are. So the first one is CBC.ca. They're talking about it. They failed because the depositors hurried to withdraw their money over anxiety of the bank's health. This is the largest bank failure since 2008, and that was Washington Mutual. We all remember the GFC. Now, this is what I want you to remember. There are different type of depositors in a bank. So number one, imagine we can have guys who are depositing $50,000 of whatever. You have a federal insurance that is there to protect you in case the bank ever goes down. Now, it depends what country that you're in, but it's generally quite generous, normally around $250,000. But the people who are above that, they don't get their money. They could lose their money if they have more than that in the bank. So if you have less than that, then you're okay. You're going to have access to your money anyway. The bank would come in, you wouldn't be able to move it for a couple of days. Now, this doesn't just go for the Silicon Valley Bank, any bank. You're going to be missing your money for a couple of days, which is why we always suggest have a couple bucks stashed aside, ready for a bad day, because you might need it in that case. But let's continue on with this, because this is, I cannot believe what's happening. So little chance of chaos spreading. What a joke. In these articles that there's little chance of it. So the bank is worth $200 billion. We're going to lose $200 billion. Little chance of it spreading. What a load of crap. Now, they're saying some of these massive companies, Airbnb is there. Roku had $500 million in there. Unbelievable. So remember, if you are Roku, Airbnb, DoorDash, if you are Dropbox, all those companies are using that bank. So if that bank goes down, then it takes all the companies down with it. So think of the contagion that this can happen over and over and over again, downstream effects. Now, we have seen a lot of tough talk over the weekend when this was coming, but remember, it's not just the 200 billion that the bank loses. That's not the money. We're talking about, imagine you were a company that had 10 billion and you had your whole 1 billion profit in there and then lost it. That'll take down the whole company. It's not just the loss of the 1 billion, it's the entire company, and that's all their money. So you might lose 10 billion in an economy because of that. We're talking about big dollars. So let's continue on quick. As we saw, Ackman last week was advising, please to the governments, please bail them out. You don't realize how big this problem is going to be. Even in Canada, we're looking up north. Canada's erased $20 billion because of that. So even the Canadian banks, Scotiabank, BMO, TD Bank, had put in all this money into the Silicon Valley Bank and lost it. How come we can't let big companies fail? If you are that terrible with your money and you cannot hedge for interest rates going up, we've been talking about it on this channel for 2 years. If you can't hedge yourself in case something like that happens, should those companies even be around? Now, Silicon Valley Bank, the majority of what they do is they fund things that no other bank will. What if you have like a dog walking app, or you wanted to create a winery, or all these higher risk stuff? That's what they specialized in. And they said, we'll fund you if, big question, if you use our bank exclusively. So all these banks say, yeah, sure, absolutely, no problem, we'll do that. So they keep on dumping in their cash. Now, we know how federal fractional banking reserve works, where they take $100 and then they only have to keep 10% of that, $10, so they can lend out 90. And then if they have $90 in their account, they only have to keep $9 of that, and they can lend out the other 81, and so on and so forth. If we use this trick with fractional reserve banking, you can now lend out 9 times the money that you take in. Let me repeat that. You can lend out 9 times the money that you own. If somebody gives them $1 million, they can now make loans for 9 million legally. Banks can create their own money. It's not just the governments that do that. Banks do this, and that is the way that they do it. Now, this contagion is crazy, and I cannot believe how far it goes. So in California, there is a very large Jewish community that is there, and they also really like technology, and they love biotech. Now, if you go to Israel, Israel has some of the best technology and best biotech firms in the entire world. So the major banking crisis, please go to ndtv.com and check that out. The major crisis in the tech sector. Now, the Israeli prime minister is talking about the Silicon Bank collapse. He didn't know what on earth he can do because half of his country might shut down. So Netanyahu, the prime minister of Israel, he was saying that he is going to move in and help these Israeli businesses that are going into this liquidity squeeze and are going to lose money. Even Israel is getting dragged into this mess. And guys, this just happened Friday morning. We haven't even seen the contagion. To which, as soon as we saw that, we saw Janet Yellen. Janet Yellen comes out and she says immediately, we will not bail out the banks, period. Headlines everywhere. We will not bail out the banks. She didn't care. And why should she bail out the banks? Like I go back, we have to be able to say at one point in time that if you do not manage your money correctly, that you should go out of business. I'm just sorry. That's just the way it is. This is the way the world has worked for thousands of years. We cannot wait on a nanny state. So if you remember 2007, 8, 9, 10, all of the trouble that happened in the great financial crisis, they came out with laws that banned bailouts, banned them, not allowed anymore. So, of course, a lot of political posturing. We will not bail out the banks, period. Okay. Canada, United States, doesn't matter. They're no longer going to take taxpayer money out for that. So what happened? How did they do a 180-degree turn? This is what I'm asking you. How is that possible? So now the U.S. regulators are saying that the bank customers will be made whole as another bank fails. Oh my God. Like you can't make this stuff up at all. So they said just yesterday, they will not bail out the bank. Absolutely not. And then today they're saying, don't worry, you guys, we're going to give you 25 billion with a B. Okay. 25 bill is coming their way. Unbelievable. In an extraordinary action to restore confidence in America's banking system, the Biden administration on Sunday guaranteed that customers of the failed Silicon Valley Bank will have access to all their money starting Monday, ensuring that even uninsured deposits will be returned to them on Monday, regardless of how many millions and or billions your account is, you will get it. Now, it's funny, they say U.S. taxpayers will not be on the hook for either facility. Sorry, I can't help it. The U.S. bank, first of all, they will not be on the hook. I'm going to show you how that's going to happen in a second. The US banking system remains resilient on a solid foundation. Oh, yeah, sure. Solid foundation. 3 banks have collapsed in 2 days. Sure. In large part due to the reforms that were made in 2008. There's better safeguards on the banking industry, so the regulators say. Please, guys, I'm going to give you a minute to laugh about this, okay? Because how are the banks safe when bank after bank after bank is going down? This is something that we have to pay attention to, right? But how can they say that they're not going to be on the hook? I don't understand that. So here is something I pulled up, an older article. The lawmakers behind the Dodd-Frank in the United States, they say they will not foot the bill the next time a bank fails. Maybe you have to read that again. They will not foot the bill if the next time that the bank fails. They're just not going to. This is what the Dodd-Frank article said. In the event of another financial collapse, the lawmakers behind one of America's largest financial reform bills say the government would not need the political support it needs for a bailout, that legislators would not agree to save a financial institution with taxpayer money like they did in 2008. So I got to read this one too, because it's called the Dodd-Frank Act. Dodd himself said, not only politically could you not get away with what we were able to do in 2008, but legally we cannot do it. This is Dodd, the actual congressman who wrote the law. Not only politically could we not get away with what we did in 2008, but you legally cannot do it. Oh my God. And now we've just done it again, which I don't even understand. It's you either have to laugh or cry. So what did the law say? We said we're no longer going to allow bailouts. So the taxpayers are not going to bail out banks, which we just saw. They reversed on that. Now, CDIC is the Canadian Deposit Insurance, in the States, FDIC, okay? So both of them, but they both now have bail-in power. So they want to choose the banks that they feel, I'm saying they in air quotes, are systemically important and considered too big to fail. And they say there's inadequate tools otherwise, that taxpayer-funded capital injections to support these banks, it might be necessary, but they prefer to do bailouts. Bailouts were what was done. Now we want to know what bail-in is. And it says that it's to rescue a failing bank by making its creditors and shareholders bear the cost of recapitalizing the bank through conversion of the bank's bail-in debt into common shares. Okay, so we got to talk about this because I feel that if we're not being very proactive in understanding exactly what this means, we're going to lose. We're not going to make it through this, okay? So let's take a look at my board, and I'm going to show you a couple of things. So most banks want to have less. If you have less than $250,000, then you're going to be insured, okay? $250,000. So technically, the more that you have of people that are less than $250,000, those people are all insured. So just imagine your bank was 100% of these guys, less than 250,000. That means your entire bank is insured. You would never really have a problem. Now let's contrast that, okay? And we'll move over to the other side. Imagine you were 100% not insured and everybody had over 250,000. In case this bank, SVB, the Silicon Valley Bank, they had hardly anybody. So in this category, they only had 10%. Oh, sorry, over here, 10% of people who were insured, and 90% of people were very wealthy and had over $250,000 in their bank account, which means that they were shot. Okay, they're finished. To put that in perspective, the majority of banks are about 50-50. Meaning they have 50% of their clients that are insured and the other 50 are not. So then they have to do their own homework and balance out T-bills or whatever else they're going to do for risk management. But they are not doing that. And so to see them come on now and actually like kind of break the law, and I'm doing that air quotes as well, if you're doing that to break the law, because they said no bailouts like we just covered, right? So how on earth are they still doing that? How? And so this is where we got to think about this. What they are doing, instead of just loaning them $25 billion just to open up. Remember, they were $211 billion worth of assets. So they're only down about 10% when the bank run happened, but just that 10% is enough to bankrupt the company. So that's what they lent them is 25 grand, but they're not giving them a straight up loan. What they're doing is the bank now is giving them 25 billion of assets, and in exchange, the government is giving them 25 billion in cash. So the reason that they're able to say in the article that the taxpayers are not on the hook for this is because they're getting a form of collateral for the loan. And now, again, all money from the government is taxpayer money. Let's just get that straight, right? But they are giving them $25,000 of cash for $25 billion of assets. Now, what are those assets? The $25 billion of assets could be mortgage-backed securities, which most likely it's going to be. But as we know, the homes that they specialize in is down in the United States, and properties that were like $5 million before that may have had a $4.5 million mortgage on it, those homes now are all the way down to $3 million. So even though they have 25 billion worth of mortgage-backed securities, it possibly is only worth like $15 billion. But the government is willing to take it anyway, hoping that in 10 years or whatever the time it's going to take to recover, that eventually they'll make their money back. So they are, whether you liked it or not, they are bailing out the bank by giving them cash with even less collateral than what it's worth today. This is unbelievable to me because this is not just the beginning. This is like the not even the first inning. This is the national anthem at the beginning of the inning. You guys know that I've been saying for over a year that we are flat out in a recession. But the governments don't want to believe that. And this is where I'm shocked at the public, because the public always is saying, well, what the government says that we're not in a recession. Guys, we got to open our eyes. As the wars are continuing and inflation is out of control and every department is freaking out, losing money, we're in so much doo-doo right now. We haven't seen this since 1945. Forget the 70s. But yet nobody wants to declare anything. Here I am in a big city in Canada, in Toronto, where millions of people live here. And guess what's happening here? Home prices are down 30%, from 1.5 million down to 1 million. The loss is massive on a lot of people. And remember, you don't need a lot of people to bankrupt the entire system. Let's jump back to the screen now, because I want to show you this one last thing. If we look at the totality of the mortgages, the entire mortgage industry that was in the United States that caused all of the problems way back when, there was only 4.5% foreclosures. That's it. 4.5%. When we're looking at the bank that we're talking about today, Silicon Valley Bank, they were worth $211 billion. They're only short somewhere between 15 and 25 billion, and that took down the entire bank. So please note that we're not talking about needing the entire industry to change. We only need 4.5% to change the entire world. 10% of that bank took down the entire bank, and the government had to move in. So you have to ask yourself, are you doing what you need to preserve your capital? So if you're under the $250,000 insured amount, you're going to be okay. If you're over that, you got to start moving your money around. And it's not just moving it into different banks or different accounts. You're going to have to do some alternative things as well. You guys know that I'm a huge fan of always collecting some gold and silver. There is no third-party risk to this. Once you have it, it's yours. So, and then go put it in, store it in overseas vaults, put it in private vaults here, put it in a safety deposit box, whatever you have to do to get some money off the system. That's what the talk is always about, Bitcoin and Ethereum. But if you get some Bitcoin and Ethereum, that's also off grid. What if you have some cash lying around your property that you can have just in case something goes down? You have to make sure that you're going to have some type of dollars in the system to make sure that you're going to be okay. You need some cash. You need something to be able to buy the things that you're going to need for your family. I cannot believe that we are even talking about this after we changed the law and said that we are no longer bailing everyone out. Bail-ins are terrible too. But every business cycle, It always will bankrupt a lot of people and a lot of businesses. Every single recession, millions of people lose their jobs, millions of people lose their businesses, millions of people lose their houses. Okay. And I'm talking even a country or around the world, a lot of people do. But every one of them have a common thread. That common thread is that they haven't gotten ready beforehand. I remember watching this cartoon when I was young that had an ant and a little grasshopper, and the grasshopper was playing around all summer long. And the ants are working continuously all summer storing food. But then comes winter, the the grasshopper was dying out in the winter, and the ants were all fine. Guys, I've been telling you for years, please, please, please prepare yourself for what is coming. So what we saw on Friday it's not the end. It's not the last bank that this is going to happen to. There's going to be more and more and more banks that are going to need federal assistance in Canada, in the United States. We just saw that Israel was going to be doing it. This is going to happen over and over again. Remember 2008, 9, 10, when that happened, it was hundreds of billions of dollars of rescue money to keep them open. I think it was like $700 billion in order to keep them open. If you think that this time it's only going to cost $700 billion to keep people out of trouble, I think you're going to be sorely mistaken. The amount of money that is going to be needed this time is trillions. And remember, with a T, if they need that money, the banks don't have it, the governments don't have it. They're going to have to print a lot more. So all of you who are concerned about inflation, understand that huge inflation is probably going to come. Please do your due diligence. Look back at 1945 to 1950. We had massive inflation, and that is how we got debt under control. So just imagine in a world today, if you were making the exact same money and not a dollar more, okay, nothing more, but everything in your life was 50% more. Your mortgage payment was 50% higher. Your credit cards were 50% higher. Milk was 50% higher. Rent was 50% higher. Everything, 50% higher. I'm asking you, how would you do that? And so if you could prepare for that and you will be okay in that type of situation, then you're going to be okay. I want you guys to be okay. This is shocking news to me that it happened, but it's also not too shocking in a way, because I've always said that they're going to print massive amounts of money. I think the shocking part for me was, number one, how fast the contagion is happening. How did 3 banks go down in less than 48 business hours? Unbelievable to me that it's happening that fast, but we live in a very interconnected world. That's my first thing. Second thing is the government must be losing a lot of face, because they came out so vehemently yesterday, Saturday, saying, oh my God, we are not bailing you out. And I'm like, okay, well, that's what the law says. So I'm shocked, but I thought they would print. So, of course, the government is doing their calculations on their own, and they're saying to themselves, okay, so we can screw that bank and the $200 billion gets wiped out, but now maybe Airbnb and DoorDash and Etsy and Roku and all these other companies will all go bankrupt. All the almond farms, the wineries will all go bankrupt. Think of the contagion. All these other countries have money invested in that bank too. Then they're doing their calculation. Okay, if we give them 25 billion, we're not going to lose $500 billion of economic activity that's going to get taken down because of it. And they're doing their calculations. So what an about face. I can't believe it. I'm interested to know what you guys thought. Please leave a comment below and let me know what you guys thought of this. Anyway, I want you guys to be safe. Hopefully this keeps you safe. Please consider subscribing, and I'll talk to you guys soon. Have a great night.